I'm Tom Ford, Head of Investment Research at TradeCMX. Last week, I saw the best possible trade for the coming week as long of gold, and short of the US dollar. The result was nicely positive. Gold/USD rose by 1.02%. This past week has been dominated by two major factors: continuing tension over Korea, and a historically very powerful hurricane, Hurricane Irma, which has caused massive destruction in the Caribbean region and is currently heading towards Florida. It is feared that even if loss of life is minimal thanks to safety precautions, evacuation and sheltering, the economic damage of such a powerful hurricane passing right over all of Florida could be vast, and it seems to be this fear which has helped damage the US dollar over recent days. At the time of writing, there are signs that the impact may not be as bad as the worst-case scenario, with the hurricane's intensity seeming to drop somewhat, and its track veering westwards, suggesting that the eastern part of the state, including Miami, may be spared from the brunt. If the damage is much less than expected, the US dollar may enjoy a relief rally, at least for a day or two. The news agenda this week will probably be dominated by the impact of Hurricane Irma upon the continental United States, and some key US economic data due at the end of the week. Following the current picture, I see the highest probability trade this week as long of gold, euro, the British pound, and the Japanese yen, and short of the US dollar. All these assets are in long-term bullish trends against the US dollar. Euro to US dollar. The euro to US dollar pair rallied during the week, breaking above the 1.20 level. By closing above that level, it's a very bullish sign, and I think that short-term pullbacks will probably be buying opportunities. However, be careful, as we are most certainly overextended. I believe that eventually, we go to the 1.25 handle. US dollar to Canadian dollar. The US dollar broke below the trend line against the Canadian dollar during the week, and it now looks as if the 1.20 level will be the next major support barrier. However, I think we may get a little bit of a short-term bounce, offering a better selling opportunity. Eventually we will break down below the 1.20 level, and go looking for the 1.15 handle. US dollar to Japanese yen. The US dollar broke down during the week, slicing below the 180.50 level against the Japanese yen. Because of this, the market looks likely to continue to go lower, perhaps looking for the next psychologically significant level at the 105 handle. I think short-term rallies should be selling opportunities, as the market is clearly broken down below a major support barrier. TradeCMX, trade with capital market exchange.